Let's learn about income from salary in detail. When a person works for someone else or company, one is then said to hold a job and is called employee. The person or the company one works for is called employer. Money that is paid is called as salary or income or wage. Salary equals basic salary plus dearness allowance, optional plus other allowances plus perquisite plus benefits. Dearness allowance is received by the government employees. A payslip is a document issued by an employer to an employee which shows how much money an employee has earned and how much tax or insurance etc. has been deducted. TDS and Form 16, one gets the salary after tax is deducted by the employer. This process is called as tax deduction at source (TDS). Company must issue a Form 16 which contains the details about the salary earned by that employee and how much tax deducted. The tax deducted, TDS, is paid to the government by the company. Form 16 is the proof of employee's income and tax paid to the Gov. More details about Form 16 here. Form 12BB from June 1, 2016, all salaried taxpayers have to submit Form 12BB to claim income tax deductions on leave, travel allowance, concession, LTA, house rent allowance, HRA, interest paid on home loans and income tax. Our article Form 12BB for claiming income tax deductions by employees explains it in detail. Form 26AS has the details of all the tax deducted and deposited against one's PAN. Often an employer talks about CTC, cost to company. CTC is the total expense incurred by the employer in hiring an employee. Salary is actual payment received by the employee. It is around 60 to 70% of CTC. Let's understand terms associated with salary. It is necessary to understand them as it is used in filling income tax return forms. Image shows how salary is shown in the ITR. Basic salary is the basic and main component of income. The percentage of basic differs from company to company. It is the basis for the calculation of various other components of the payslip. Basic is fully taxable. Within a company, basic salary generally depends on one's designation. Any increment in the salary is expressed as percentage of basic salary. Allowances are fixed periodic amounts, apart from salary, which are paid by an employer for the purpose of meeting some requirements of the employee. E.g., tiffin allowance, transport allowance, uniform allowance, etc. Some examples of allowances are given below. These allowances appear in Form 16, Part B. Dearness allowance or DA is paid to reduce the impact of inflation on the employee. Government employees receive dearness allowance in some companies. DA is an optional head of salary. But most private companies do not pay DA. House rent allowance or HRA is an allowance to pay for the house rent of the employees. It is based on a formula which uses basic income, whether one stays in metro or non-metro, equals etc. Employees can claim exemption on this by submitting rent receipts. Conveyance allowance, it is an allowance for an employee to cover her expenses of travel from home to work and work to home. Other allowances, there can be various other allowances according to the company policies. These can be uniform allowance, special allowance, city conveyance allowance, child education allowance, etc. Perquisites are benefits received by a person as a result of her official position and are over and above the salary or wages. These perquisites can be taxable or non-taxable depending upon their nature. Example of perquisites are stock options, ASOPs, RSUs, awards, car lease, rent-free accommodation, free electricity and water supply. They are found in Form 16, Part B and Form 12BA, which gives detail. Example of perquisites in Form 12BA are shown below. What is the value of perquisites in Form 16, Part B as shown in the image? The standard deduction is essentially a flat amount subtracted from the salary income before calculation of taxable income. The standard deduction of 50,000 rupees is available for salaried individual and pensioners. For FY 2018-19 standard deduction was 40,000 rupees. As one uses standard deduction, medical reimbursement and transport allowance were removed. But one can claim allowances like leave travel allowance, LTA, house rent allowance, HRA. Note, if you go in for new tax regime, then you cannot claim standard deduction. In addition to salary and various allowances, the employer also provides various benefits to an individual to save for retirement, such as Employer Provident Fund, APF or corporate NPS. Many are available at the time of leaving the organization, such as gratuity, leave encashment, superannuation benefits. Provident Fund or APF are the retirement benefits to the employee. PF is calculated on basic plus DA, cut off at Rs. 15,000. Only employee contribution of 12% on basic and DA can be seen in the payslip of the employee. Employer also contributes 12% towards APF, APS, up to 1250. APFO also provides ADLI or insurance while employee works and contributes towards APF. Professional tax is a tax collected by the state government from all salaried employees. PT varies from state to state. It is calculated on the gross earnings of the employee. Gross earnings are the sum of all income. The maximum amount of professional tax that can be levied by a state is 2,500 rupees. In your income tax return, professional tax is allowed as a deduction from your salary income.